The streaming wars are heating up with Netflix set to report earnings after the bell, but how are analysts feeling? Yahoo Finance's Canal joins us now for a pulse check on Wall Street. Allie, what is the street saying at this point?
So the street is basically saying it's not so much going to be about the actual results or the actual numbers, but more so about the commentary that we get surrounding the password sharing crackdown, in addition to that ad-supported rollout, which we saw in November. Those are two big revenue drivers for Netflix that analysts see playing out very positively in the quarters ahead, particularly in the back half of 2023 and heading into 2024. But there will be some short-term noise, especially as it relates to churn. JP Morgan was out with a new note this morning ahead of those results, and they demonstrated how some of that noise has already played out, with Google search trends peaking for the phrase cancel Netflix right around the time that the company announced those the implementation of paid sharing efforts, so right around January and February earlier this year. Now, because we haven't yet seen this crackdown roll out in bigger countries like the US and Brazil, I have noticed a lot of analysts on the street are revising their subscriber forecasts up for the first quarter and lowering them for Q2 in order to reflect any potential churn that could happen as this rollout continues to affect certain countries. Now, in a new note ahead of earnings, we heard from Wells Fargo analyst Steve Keyhall. He's a very well-respected media analyst on the street. He had this to say about the password sharing crackdown, writing, quote, U.S. implementation feels a bit delayed, but we think that will feed incrementally bullish comments from management about the sub/revenue opportunity. He added that extra member pricing, or the cost of adding more members to a user's account, will come in at about $8 a month in the US. That's obviously a big driver when we think about revenue upside in the quarters and years ahead. If we take a look at the stock, it's up more than 10% year to date, roughly flat on the year. Across the street, we're seeing 26 buys, 25 holds, and 4 sells, according to Bloomberg data. And options trading is implying a move of about 8% post earnings. So should be a really spicy report that we get. And Brad, we're going to be breaking it down on after the call as soon as it wraps up.
I know. We were keeping a close eye on NFLX shares going into this as well. And even the options market right now pricing in about a 7.5% move, absolute value. Yeah. Going into this report based on some data from Options AI. I mean, I'm leaning on artificial intelligence to see even more of what this implied move might look like, Rochelle.
And I'll definitely be keeping an eye on it. You know, obviously a lot of people said they were going to cancel Netflix before it even came, before that the password sharing crackdown even came to the US. I'll be interested to see if that actually ended up translating into anything ahead of that. But obviously a very crowded space here. So how is Netflix trying to differentiate itself from the streaming space?
I think the biggest thing for Netflix is its ability to lean on its global content. And relative to competitors, the company has really been able to deliver on that. We've seen a ton of international success, like Squid Game, and how great that has done for the platform. JPM anticipates that the platform will reach 300 global paying users by the year 2027, despite all these near-term risks surrounding churn. Another risk that's floating around Hollywood right now is a potential writer's strike. We heard from Late Shed Partners Rich Greenfield, who said because Netflix is so reliant on international content, and remember, those international productions, they don't have anything to do with the negotiations over here in the US, that could be a potential positive for Netflix down the line. And then obviously we've seen other initiatives from the platform, such as its foray into live events. Of course, that didn't quite work out with the live Love is Blind reunion special. That was a bit of a botch for Netflix, but if they can figure that out along with their gaming initiatives, I do think that's something that can retain those loyal subscribers down the line.
Everybody's favorite guilty pleasure.
Oh yeah, I just started it. I avoided it for a really long time, but now I'm obsessed. So here we go. But at least I'll be able to see the reunion special and not be disappointed.
You'll be able to watch it all the way through.
Exactly.
No interruptions. No interruptions. Rochelle, what about you? Love is Blind?
I watched Love is Blind. I think I watched it to like halfway through and I was like, I don't know about this.
It's the weirdest concept ever. I think to myself all the time, like, could I do this? Probably not.
No.
We'll have to do it. We'll have to do a Yahoo Finance Plus.
Nope, I'm done.
Come on, let's experiment.
Nope.
Yahoo Finance reality.
Was available for, declined to comment.
There you go. There you go. What could possibly go wrong? A big thank you there to our very own Allie, Canal. Thanks so much.